Hey everyone, welcome to the KE Report and a special earlier daily editorial with our good friend Joel Elconin, co-host of the PreMarket Prep Show and editor of the PreMarket Prep website. We usually chat with Joel on Fridays, but we moved it up this week because we want to focus on the news that came out of the AI sector over the weekend and really riled markets yesterday on Monday. DeepSeek, I think most people I'm sure are up to speed on this, where DeepSeek came out and said that they have an AI model that works better than some of the even better known US AI models and uses cheaper hardware, use off the shelf gaming chips rather than these much more expensive chips that, well, those companies that make the more expensive chips, they've been running, but they took a hit yesterday. Really makes you think about the advancements in this whole AI sector. And quite frankly, this seems like a technological advancement here where we don't need these extremely expensive infrastructure build-outs to still have an effective AI model. Now, of course, this is all very early stage news, and also there was a report that DeepSeek also got hacked at the tail end of yesterday. So a lot of things to touch on here, Joel, but in your eyes, just how important is that DeepSeek news to the overall AI sector, or do we need to piece it out into the individual components that are fueling that AI boom?
Oh boy, there's a lot there. First of all, thanks for having me on. Definitely market moving events that need to be covered. I guess we can break it down technically and then we can break it down fundamentally. I guess I'll do the technicals first because they're easier to do. And from the technicals, using Nvidia as an example, because that's the stock that got hit. Oh, Oracle got hit really bad as well. Nvidia did, the bulls did what they needed to do today, and that they needed to defend yesterday's low. You guys have been listening to me long enough. My methods of technical analysis are no trickery, double bottoms, double tops, triple bottoms, triple tops. It withstood yesterday's low, and it has made a significant bounce off that. That is important. Also for the SMH, same thing. Kind of undercut yesterday's low, but it's still above it. That is still in the red, but it bounced. It held the level. No, it's actually in the green now, so that's good. And then the SOX. So technically, the bulls did what they needed to do. Now the question is to me, I look at a stock like Nvidia, where it was trading over 140, 142.58, I believe it was a close on Friday. To me, for the street to say, hey, this is nothing, this is not going to affect Nvidia, then I got to see that stock back at 142, and that's a long ways to go. In order, it's $18 away, but we know the way that stock moves. Also, another thing, when you have these steep declines, whether it's in the chips or we also go into the implications from the energy trades, you create a whole different market structure, right? Because there are people that were sitting fat and happy at 140, then they're looking at one teens and they're like, hey, maybe I need to get out at 130, 135. You also have people that weren't in the stock like Nvidia that looked at the multi-standard deviations move, and they're buying large positions. They don't care if the stock goes back to 135. They don't care if the stock goes back to 140. They're amassing large positions that they can hold a week, 2 weeks, 3 weeks. They're going to be getting at with no regard for the gap fill or for their earnings or for the long term. So those are the couple things on the technicals. Boy, fundamentals, I don't know where to start. The timing of this by China, impeccable. The government rolls out a program, $500 billion. Oracle, Microsoft, many other companies were mentioned in this. So the narrative of them coming out with something that is cheaper and better at a time where the market was propped up near all-time highs on Friday. I don't know how bullish or bearish it was on Friday, but you're at a major resistance point, and then this kind of news comes out. Is it better? Is it worse? I don't know that. I've heard it doesn't give as good information. It's buggy. As you said, it might have been hacked. Only time will tell of whether or not the technological advances that they claim that they have are actually true. So I wouldn't say I'm skeptical of the fundamentals, but I would say I'm cautious skeptical. I guess it's the same thing. I really think you have to take a grain of salt the information that you got yesterday if you're a long-term investor.
Well, Joel, a question I have on the technical side. I mean, yeah, we can debate the fundamentals, and there's a lot we still need to find out to even know how the fundamentals are going to shake out. But when you just look at it technically, the chart damage that was done in one day, like you say, a lot of people are jumping back in, they're buying the dip, but we call these fishing line sell-offs, where they just, you see that long candle down, that red candle. That kind of chart damage sometimes takes a while to work off, because to the point you made, some people start thinking, hey, maybe I need to hit the escape hatch if this thing bounces, and it creates more selling pressure. How do you look at a market once it's had one of these swan dive days?
I'll just look at Nvidia, and I'll just look at the range that bar from yesterday. I mean, that daily bar is your focus, right? Yesterday's high, I believe, in Nvidia was up near 128.70. It got a little bounce, right? No, 128.40 was the high. I'll look at the 128.40 to 130 area, because that had been support. That had basically been the trading range for all of January, but it breached it a little bit in December. But what you want to see, if you're an Nvidia bull, okay, you want to see it get above that 129.40, start to work its way, through the 130 area. Then you got now the 50-day average, with moving average, which you were perched atop of. Now you're substantially below it. So I think you just if you just need to be patient, and maybe China created a, I don't want to say a once in a lifetime, but a very unique buying opportunity in this stock. Let's see if long-term and short-term investors, do it. Of course, it all comes down to earnings. You did have a couple price target cuts on Nvidia today. I don't really put too much credence in those, because that happens after the fact. But yeah, just look at your charts from yesterday. Look at that daily high. You got to get above that high, and then, just not trade over it, but get above that high. Make 130 support. Build a base between 128 and 130. That's what I'd be looking. I would really focus on that bar from yesterday, and then a potential gap fill in these stocks.
Joel, let's also talk market leadership when it comes to the AI sector then, because it was the chip makers that were seeing some of the best gains. But the problem also is a lot of the companies developing AI models are the largest tech companies, which have a whole lot of other aspects that are also driving their stock. But now that potentially these companies don't need to use these much more expensive or advanced chips, is there a shift that's going to happen in the AI trade? Because I don't think this AI trade is dead, but it could very well be shifting who benefits from it.
I mean, if this is true, I mean, maybe you want to look at, I mean, like the lesser chip makers. I mean, Intel got hit on this yesterday. I don't know if you could, Micron got hit on this yesterday. Micron battling right now here as we speak. Micron looks the worst. It did put a double bottom too. It hasn't bounced off much. I don't know if you can really differentiate, who the chip makers are. I think it really, what it's going to come down to is what they're saying that this platform can do. Is it actually true? Is it actually the results? Are they, I've heard people saying that it crashed and everything. So, yeah, it could, it could be a major paradigm shift. But to me, it just, like, I look at them one, and I look at them at all. I look at Marvell. I mean, well, Marvell's up today once again. That put in a double bottom. I mean, I'm gonna I don't know what the course of AI is gonna be. I can tell you what these charts are telling me. And the charts are telling me the bulls dug in here, and they're a non-believer in DeepSeek. Whether or not it gets back and it's a whole hoax and nothing's going to happen, only time will tell on that.
Well, Joel, another whole parallel track that was going on yesterday was the thought process that if we don't need these AI data centers, and if this technology is going to run on gaming chips and lower tech, we're not going to need the huge electricity demand. So two sectors that also got hit were utilities, like Constellation, down 20% yesterday, CEG, and it's down again today, and also the small modular reactor stocks like SMR, NNE, and OKLO. So they were down 25% plus yesterday because of the concerns about, hey, we're not going to need as much electricity. When you look at something like Constellation and you see the technical pattern there, it's not bouncing today. The bulls didn't do their job. What do you think of something like CEG?
I mean, it's turned. I mean, the first thing is you gotta, it has to stop going down, right? And it did take out yesterday's low. It is now attempting to bounce. I think with this one, because it's just so, what it closed on Friday at 347.44. I hit a low of 259 today, oh nine. I think I would use, since you don't have the double bottom in place, looking at this technically, my bogey's 275 because that's where it closed yesterday. It did not. It traded above that today to 284, but then tanked. So for this one, I'd play a little bit. I'd say, I don't see it having a ray of hope until it gets, closes back above 275 and puts a bid in there. I mean, you have to look at the moves that these stocks have had. I mean, it is, if you want to go for solid monthly support in this thing, it's really closer to the 220 to the 225 area. I'd say first it has to stop going down, and then it needs to build a base, and then it needs to, we need to find out, the validity of their. I mean, one thing, all this is based on is hype and overnight trading activity, which we know it's thinner, it's easier to move markets. With these kind of things, I mean, it's going to take time to tell. But with Constellation Energy, you have people that are stuck, that are just toast. This thing's going to 400 at the end of last week, and now you're looking at it the 270 handle. So once these, I think I'd be more worried about these stocks than I would about something like Nvidia.
What about the uranium sector then? That was also benefiting from this, again, more energy demand. And I think this is also a lesson that when we take a point in time and project out energy demand or any sort of demand for a new product, things change. There are advancements and we need to reevaluate some of those models. Look at something like URA, that global uranium ETF. That took a big hit yesterday, mostly flat today. What are you seeing in that chart?
Look, I mean, this is amazing. I mean, you got a double bottom. You didn't quite get to yesterday's low, 26.60, 26.67, the low of the day. You're back up at 27.20. You're green on the session. I mean, it's not going to bolt out of here like it did earlier in the month, but with this is a little lower price, a little more tame. You actually have some other support at the end of the year at the 26.60 level. So I wouldn't throw the baby out with the bathwater under 27, but I would look to those lows from the end of the year, 26.60, 26.67 as, major support. I mean, also what you have to look at too on something like that is, it peaked. The uranium already peaked back in October, and it made a lower high in October. It made a high in October at 33.99, November 33.56, 32.93, 31.60 is high. So you have descending monthly highs in this thing. Until that pattern is broken, the path to least resistance is still lower.
Yeah, don't like to see those lower highs, a pattern of that happen on the chart. So I need to see something change for the uranium stocks. As mentioned, kind of sitting between the uranium stocks and the utility stocks are those small modular reactor stocks. Let's just look at SMR, which was the gang leader of those. It's down again today. It's had a huge move down yesterday. What do you do with something like the nuclear stocks like SMR?
Same thing. I mean, this made its all-time high in December. And then, came up, made a lower high earlier this month. So, a period of a lower highs on the monthlies is not something that you want to see right now. The month is not quite over yet, but doesn't look like we're to gain another 10 sticks here to get positive of the month. So you have a period of lower monthly highs. You had that kind of period starting in mid 22, and that lasted all the way through the end of 23. So, technically, not looking good for this one. I would have been, if I was looking at the onslaught yesterday, or I was looking for an area, I'd look at the $18 area, just under 18. Actually, a little bit lower than that, the 1740 area. You had a trio of lows back at the end of last year, and going into the first day of the year, the low was 1793. So the longer it could build the base here, once again, did take out yesterday's low. If you want to keep an eye on it real short term today, if you want the undercut and rally trick, yesterday's low 1966, undercut that. But if you want a short term trade, gets back above 1966, and you can lean on today's low of 1901. But once again, the technical, I mean, you just have created so much overhead supply in these things, until you get more clarity on really what this is, what it's using. It's going to be hard. It's going to be hard for these stocks to rebound.
Joel, let's take the other side of this too and look at some of the stocks or sectors that did well yesterday, because it was a sea of red. That news pulled down almost everything, but a couple tech stocks, Apple, Meta, they didn't get hit on the news. And also, curiously, the Dow was up. It wasn't up huge, but in that sea of red, seeing any green, especially something as big as the Dow, stood out to me. Any takeaways from what didn't get hit yesterday?
Oh, well, Apple is just the apple of my eye. I mean, that is just, what a move in that. You have a couple different factors in the Apple. Number one, they were punished. I mean, all these analyst downgrades. If you want to get me a bullish on a stock, give me a downgrade from Jefferies. Give me a downgrade from Bank of America. Tell me how many iPhones they're not selling. Tell me about how the supply chains are weak. Put in an area, go to the 220 area, put in multiple lows in there. And then, like I said, they're being criticized for not spending all this money on AI. Well, is that such a bad move now if this is a threat? Also, Apple is a services company, right? They they're charging, they charge for their phones, but then they're expanding their services, earnings, and that's becoming more of a part of it. Also, who wants to be short Apple into an earnings report, right? They're due after the report, after the close on Thursday. So they were a benefit. I mean, this market, it's just one thing, and taking away, you talked about the Dow. And I'm not going to say we're not going to have a major crash. I could be the biggest bear around. But when you have this kind of rotation in the markets, the money is finding out, the money is going somewhere. And as long as you have that, you see the price action that you have from yesterday, and that could be, is that the changing point? And another thing, is this a paradigm shift in China, right? All these cheap tech companies trading at historically low PEs. Is it time to load up on the Alibaba? Is it time to load up on Baidu? Is this a turn for these low PE They make tons of money. Tech companies trading at low PEs. Are you kidding me? So that's the FXI had a good day yesterday. Baba's perking up. I mean, so many implications of this. But XLV, you're laggard. You got absolutely trashed in the second half or the last 3 months of 2024. Boom, that's up. Having a great January. Actually, I got a good technical level for you in that one. You got a lot of double bottoms on this episode, huh, guys? 147.58 was your high last month. It hit 147.74 today. That also coincides with the series of highs back in late November, early December. I mean, when you know the fundamentals are murky, when you don't know what all the implications of a situation, you can rely on the technicals. It's just, you be prepared to be swiped. Looking at the technicals, you can rely on them, but then, you just got to be aware you can get sideswiped by fundamental news.
Yeah, just so interesting. Hey, and this type of thing, it's advancements in leading sectors that royal markets, but we'll see where this all plays out. I know we can all get a little over our skis early on when this sort of news breaks, but as you said, Joel, let's see if some of these double bottoms hold. And also, we have tech earnings, so people could very easily get distracted later on this week, and some central bank earning or central bank meetings. So a lot more that goes on this week, but boy, oh boy, that AI trade still clearly on the minds of a lot of people, rightfully so. And now that whole China component adds that extra curveball. Joel, it's great chatting with you. Again, Joel Elconin, co-host of the Pre-Market Prep Show. Click that link in the show notes. Joel, thanks for your time this week.
All right, thanks for having me.